Yesterday, June 29th, Golden Nugget Online Gaming was announced to be acquired by a blank check company, Landcadia Holdings, to take Golden Nugget public. The first thing odd about this is that David Fertitta is actually the owner of both companies, so he's merging with himself. Hey guys, so I'm not going to make too much of an intro in this video because we have so much to talk about with this new merger. I just want to ask one thing, if you wouldn't mind just tapping that like button. No. Just give a nice 5-6 foreguard to that like button. These videos take so much time and energy to make. In fact, I'm going to be up probably till like 3 or 4 a.m. today editing this video so I can get it up for you guys today whenever you're watching this, hopefully. I'd really appreciate a like so much. It helps the channel out tremendously. Comments are awesome as well. I love reading all the comments, replying to you guys. And if you are new, definitely consider subscribing down below. On this channel, I talk all about the stock market, stonks, and I try to keep it fun and exciting at the same time because I feel like there's a lack of that in this niche. So definitely consider subscribing if you're new. Let's go. What's interesting about this deal is that Landcadia has entered into a purchase agreement, not a letter of intent. A lot of these recent mergers, the ones I can come off the top of my head is the BurgerFi and Helion, they were non-binding letter of intent. So there wasn't a definitive agreement, so it still could fall through. There was nothing really set in stone. Now this deal isn't done yet, but it's a lot more further along in the process. It's a lot more definitive. It's a lot more guaranteed to happen than those other companies. The deal, which is expected to close in the third quarter of 2020, will see the operator shares traded on the NASDAQ under GNOG ticker symbol. Landcadia Holdings, company Golden Nugget is expected to merge with, was up 42% during normal trading hours on Monday and another 13% after hours off of this news. This is just starting to seem normal for these SPAC companies. We got like Helion up like 30% Monday as well. I mean, it's just absolutely ridiculous. Not to mention what Nikola has done, Draftkings has done. It's insane. And I'm going to show you something later on in this video that just shows you how this isn't like normal or how this can go extremely wrong. So be sure to stay tuned, watch all the way through to the end. I have so much valuable content for you guys in this video and I don't want you to miss it. GNOG will become only the second pure publicly traded online casino company in the US, the other being Draftkings, ticker symbol DKNG, the one we like to call Donkey Kong, which is up 214% year to date. So you see people are speculating that this is going to be the way of the future, not only because of all the Ronapalooza, but just in general, that's how things were trending as more technology based. There's gaming industry was something that's pretty much always been the same for years and years and years, and now with this online gaming, it feels like the industry is changing in a big way. Landcadia will assume approximately $150 million in GNOG liabilities, allotting for the purchase price, debt repayment, and fees and expenses related to the deal. The combined company will have $80 million on its balance sheet and an expected pro forma equity market capitalization of nearly $700 million when the transaction closes. Some quick highlights before we jump into the video. They started their operation in New Jersey back in the fourth quarter of 2013. They became profitable in 2016, which that actually sounds pretty insane. You know, Draftkings is still not profitable, and this company became profitable back in 2016. It is the first online gaming company to launch a live dealer in the United States, so this is something that could be huge for a lot of people missing that rush of going to the casino. You can actually play with a live dealer on like a webcam, which I still think is kind of weird, but whatever. They won the industry award as the top operator 3 years in a row. They were the first to launch a live casino floor in the US, and net income was over $11 million in 2019. Golden Nugget is the market leader in the New Jersey online casino market, the oldest and largest iGaming jurisdiction in the US, responsible for 33.8% of the state's 85.9% gross gaming revenue in May. In May, Golden Nugget made up over a third of New Jersey's total iGaming revenue, which is just absolutely insane. That's some huge market share. Golden Nugget claims that they're entering a massive $20 billion plus online market opportunity. The current stay-at-home climate has significantly accelerated consumer adoption of online gaming, and I wouldn't doubt this. When we were talking about Draftkings a few months ago, there was some crazy uptick on people gambling on like the dumbest things like ping pong, like the NFL draft. People were just going crazy. People are so cooped up and ready to start gambling on sports again, but that probably won't be happening soon. So the stay-at-home climate is definitely helping this company. Pandemia resistant and scalable business model with 30+% profitability margins. Golden Nugget is a household name throughout America with a national database that focuses on profitable gaming customers. A well-established leader in New Jersey, the largest online gaming market in the US, award-winning management team with a history of successful execution, and GNOG is a leading operator in one of the fastest growing markets in the US today. There's not many industries that have a huge amount of upside in today's society, but the two that I think have a huge upside is one, I guess three actually, we'll give it three. The first one is this online gaming. The second one, the EVs, electric vehicles, Nikola, Helion, Tesla, all those companies. That's a huge potential industry. And the third one is the MJ market. All right, I'm not going to say it on YouTube because YouTube's just like that. But those are the three industries that have not really been tapped into at all, and there's huge growth potential in all of them. Landcadia Holdings is a publicly listed special purpose acquisition vehicle with over $300 million in cash. Golden Nugget Online Gaming is a subsidiary of Golden Nugget that includes the iGaming assets associated to Golden Nugget's online casino operation. We're going to talk about this later on in the video, but Golden Nugget is actually far bigger than just this iGaming branch of their company. They have massive footprint with physical casino and gaming locations across the US, but this right here, this company is the iGaming branch. So this is what's going to become public. If you buy into this company and the merger does go through, you're not going to have any equity in their physical casinos. This is going to be completely the iGaming. Landcadia offered 68.3 million shares at $10 for a total equity value of $683 million. Adding the debt onto this and subtracting the cash to get the enterprise value. Remember, enterprise value, total equity plus debt minus cash. So the pro forma enterprise value, given this transaction does get finalized and go through, is $745 million. And this leads to a 2021 estimated revenue multiple of 6.1x. We're going to go deeper into the valuation later on in the video and compare them to their peers just so we can see how good of a deal this is. If we look at the shares outstanding, we can see 52% is Tillman Fertitta and Fertitta Entertainment, which is the owner. 46% is public shareholders, so you, me, anybody that owns Landcadia stock when it gets transferred over to the new ticker. And the remaining 2% is Jefferies SPAC sponsor shares, so Jefferies is also involved in this deal, so 2% is going to remain with them. Here's a quick comparison of the valuations and growth of these companies, and if you guys don't know, GAN, the middle stock. GAN has deals with FanDuel and Penn National Gaming, and Penn National Gaming owns 36% in Barstool. So GAN is very heavily exposed into the same industry, the same online gaming industry as Draftkings and Golden Nugget. First up, we have the ratio of total enterprise value over 2021 estimated revenue. And Draftkings at the time of this presentation was trading at a 15.2x, GAN a 12.9x, and Golden Nugget a 6.1x based on the valuation of this merger. The valuation has since increased as Landcadia stock increased. 2021 estimated revenues is $733 million for Draftkings, $49 million for GAN, and $122 million for Golden Nugget. Draftkings is the only one that's cash flow negative, whereas GAN and Golden Nugget have positive cash flow levels, which is great for Golden Nugget and GAN. Total enterprise value for Draftkings is $11.157 billion. Compared to GAN's $629 million and Golden Nugget's $745 million. Stock price return since launch. So Draftkings, obviously this one's pretty crazy, 228%, GAN 80%, and Golden Nugget has done nothing yet. So this is one of the first places you can see a big wave or rush of excitement just based on what their peers are trading at, what their peer stocks have done. The same thing happened with Helion and Nikola Motors. Nikola Motors exploded, and I think that's definitely being a big contributor to Helion's recent rally. So that's one big catalyst about why the stock has been increasing so much, at least in the short term. Starting off with the total enterprise value over 2021 revenue, Golden Nugget is trading at a ratio of 6, whereas Draftkings and GAN, the two US publicly listed iGaming companies, are trading at a 15x and 12.9x respectively. Golden Nugget is extremely cheap compared to Draftkings and GAN, and they're pretty much in line or on par with just the normal gaming companies that don't have as much of a growth potential in front of them. Growth adjusted 2021 estimated revenue multiple is 0.17. So this takes into consideration both the valuation and their future growth, right? Because if you have a high growth company, it can make sense to pay a higher valuation, a higher premium, as opposed to like a non-growth company. So take, for example, like a Beyond Meat and Coke. They could both be like fairly valued in a sense, while Beyond Meat's trading at say a 200 PE and Coke is trading at a 20 PE. So this factors in both the growth and the valuation. And you can see they're just trading extremely cheap compared to their competitors. Even the regular gaming companies, which is just absurd. Activision, Blizzard, EA Sports, they're great companies, right? They've got good growth in front of them, but nothing like Golden Nugget or these iGaming companies, which just shocks me. Their 2019 to 24 revenue CAGR is 35.8%, which is the highest one on the list, compared to Draftkings 33.8%, GAN at 17.1%, and then the rest are under 15%. Boom! Right off the bat, trading at a lower valuation with more projected growth in front of them. So Golden Nugget is looking pretty good so far. This is showing the Golden Nugget brand as a whole, not just the gaming part. Remember, the gaming is just a subsidiary, the iGaming aspect. This is the entire Golden Nugget company or brand, and they did approximately $4 billion in 2019 revenue. Golden Nugget and Landrys is a diversified restaurant, hospitality, entertainment, and gaming company with 600 outlets, 3 hotels, 4 aquariums, 2 amusement parks, and 5 Golden Nugget casinos. And if you don't know, Landrys is a huge restaurant company. They own like the Chart House. I think they're looking into buying the Clout House actually. Saltgrass, which is one of my favorites. Bubba Gumps, which is some pretty good seafood in my opinion. Some people don't like it, but I think it's good. Floyd Seafood, which is great. I've only seen that one in Texas, but it's a pretty good restaurant. Morton's, and so many more. I'm a huge fan of their restaurants. They're amazing. You can see their casinos here and where they're located. Their principals are an iconic brand, recognized and trusted nationwide, especially by affluent casino players going for the high rollers. Upscale casual brand with best-in-class customer experience, games, environment, service in a friendly fashion. Online, the brand is a leading online destination for casino players with a modern mindset. This shows their return on investment for the casinos, and they calculated this with the EBITDA over total investment. So their earnings before interest, taxes, and amortization over the total investment. And you can see their casinos are all in the 10 to 20% range, with LCA at 27%, and GNOG, their iGaming branch, is at 288%. So here you can actually see the massive growth compared to their physical gaming locations. For management, we're only going to be looking at this guy right here, Tillman Fertitta. I don't know if you can read it, but it says Mr. Fertitta has been the sole shareholder, chairman, and chief executive officer of Fertitta Entertainment Incorporated, which owns the Houston Rockets, the restaurant conglomerate Landrys, and the Golden Nugget casinos. Now, if you ask me, this guy is an absolute business mogul. $4.9 billion net worth. This guy is absolutely flooded with cash. When he lays down in bed, all you hear is this. All these racks give me a boner. I'm too hard. He does, however, have a bit of a blip in recent history when his other blank check company, if you didn't know, Landcadia Holdings 2, that is his second blank check company. This is the original one. Landcadia Holdings acquired Waiter in 2018, which is a food delivery platform that really never panned out. But I just want you to take a nice long look at this right here. This is Waiter's stock, and you can see this SPAC began trading at the $10 range like all the others that we've been talking about recently, and saw a pop of 22% right off the bat, but got absolutely wrecked, losing over 97% of its value from March of 2019 to February of 2020, which is extremely important because all of these SPACs seem to just keep going up. But when the hype fades, it is extremely important to understand the underlying fundamentals of the business, the stock that you own, so that this doesn't happen to you. They say iGaming players are more mature, have higher disposable income, and have a balanced gender distribution. So starting with the land-based casino players, 51% women, 49% men, pretty even split. Average age is 50 to 55 years old. This to me is the old people pissing money away in slot machines, you know, carrying their cup of quarters. I haven't been in too many casinos, but I've definitely walked through, and you just see some old people just plugging away at the slot machines, literally just throwing money into it. But a lot of them do it for entertainment, which is understandable, and not really big money is being flooded into this side. Next, we have the iGaming players, which is the middle age, 40 to 45, a little more weighted towards men. And, you know, this is to me, this is like the bored at work. You know, I'm sitting in my office, sitting at my desk. What else am I going to do? May as well throw a little money on some blackjack, see if I can buy my family some dinner this weekend type of thing. And lastly, online sports. We got the 20-year-olds who think they can actually beat the house, and they slowly start developing a gambling addiction. So these are younger, 30 to 35 years old. And obviously, those are pretty extreme examples for every demographic I talked about. That was sort of just me giving my stereotypes about these age groups in gambling. So take that with a grain of salt. I kind of just came up with that on the fly. But what you need to remember from this is the demographic, the age group of the iGaming players, and that they have higher disposable income, so-called. We're going to revisit that later on. Here we have iGaming versus sports betting. We have player economics, and I'm not going to go through this table. If you want to read it and comprehend it, just pause the video. We can see again here the average iGaming player versus the sports bettor plays longer, reinvests winnings quicker, generates a higher hold for the operator, which just means they spend more time gaming, and has a higher disposable income. Now, online sports betting is the lowest compared to land-based casinos and iGaming, because the way I see this for sports betting, you're going to pick like one team. If you're betting on a game, you're going to pick one team and that's it pretty much. You're not going to be placing a bunch of bets unless you're live betting. But if you're playing in an actual casino, right, it's so much easier to just keep on playing, right? If you're playing blackjack, you can just easily just keep going. It's so much easier. And especially if you're online, right, click of a button, it doesn't get easier than that. So that's why in my eyes, these numbers are higher than the sports betting. Sports betting, you're going to pick one game, you're going to try to win it. You're going to be really focused and engaged, because when you're playing casino games and you're playing iGaming and you're playing at an actual casino, the entertainment is the gaming. But when you're sports betting, the entertainment is the sports. Sports betting, you can have one bet and be entertained for hours, where if you're iGaming or gaming at a casino, that one bet's only going to entertain you for as long as it lasts. They have a pandemia-proof business model. Golden Nugget Online Gaming's gross gaming revenues from January to April grew 55%, where in the same time period, New Jersey's iGaming market only grew 40%. So they're outperforming the overall market of iGaming, not just the overall gaming market, the iGaming market. We have some more investment highlights, and the only thing that I want to touch on here that I think is important and worth our time is they have industry-leading monetization, $7.7 thousand of average for the 5-year player's lifetime value, compared to Draftkings' $2.4 thousand 5-year lifetime value. Gross gaming revenues is on the left side, the y-axis, and time and months is on the x-axis on the bottom. They show their market, so you can see today 13% of an $800 million iGaming market, and this is an extremely young industry, as I already mentioned. There's a lot of regulations which is somewhat holding this industry back, but New Jersey, Pennsylvania, and Massachusetts are only the start of the US iGaming rollout, and they're moving into Pennsylvania and Massachusetts, so that's what they have here as their immediate opportunities. 12% of a $2.5 billion gaming market, and in future, hopefully later on down the road, the entire country would be 10% of a $22 billion iGaming market at its maturity. So that's what they're going for. That's their golden nugget. That's their pot of gold, is that $22 billion market. GNOG is New Jersey's leading online operator. Golden Nugget Online Gaming owns 18% of the New Jersey pure casino market. So this is their online casinos. This is not sports. You can see it breaks it down in the total iGaming revenues and then pure casino revenues. On the right, pure casino accounts for 67% of the New Jersey iGaming market. This is a nice bull thesis on Golden Nugget as opposed to Draftkings, because DraftKings, I think they're absolutely killing it in the daily fantasy sports. I think they absolutely dominate that sector, right? That little niche of daily fantasy sports and sports betting. But 67% of New Jersey's gaming market is just pure casino, which is your online games, your blackjacks, your live poker, and that is where this company is right here. Golden Nugget is dominating. So that's a bull case for this company over DraftKings. Golden Nugget Online Gaming is the largest pure casino player in New Jersey with 18% market share. iGaming is expected to be a larger vertical than online sports betting in New Jersey. This goes back to all the casinos being closed, people not being able to play slots, blackjack, live table games. They're going to be able to play them online on these iGaming platforms, which is just a huge growth potential, because a lot of people that already bet on sports, they already do that online. And so there's not going to be a huge rush. Like, there's going to be more of a rush. There's definitely going to be a big wave of people coming online to bet on sports instead of going to actual casinos. But a lot of people wouldn't just go drive to a casino to bet on a sports game. You can do that at the palm of your hands on your phone. However, to get the experience to play blackjack, to play craps, you get that at the casino. Now, again, it's not going to be the full effect. You're not going to get the whole experience, all the energy, the excitement, the atmosphere of being at a casino. But with the live games, it's the next closest thing that you have. And so there's going to be a much bigger rush or a bigger wave of people going to online iGaming platforms to play these table games and pure casino games, rather than sports betting. So this makes complete sense to me that the iGaming is going to be growing much bigger than online sports betting. This increase of New Jersey iGaming as a percentage of a land-based casino gross gaming revenue is projected to jump from 17% in 2019 to 44% because of Ronapalooza. Now, this is both a decline in land-based casino revenues, but also a huge increase in New Jersey iGaming revenues. They projected it to fall back a little bit, but they're still going to be much higher than they were in 2019. And this is like Netflix with the subscribers, just a nice growth spurt due to Ronapalooza. Next, we have their growing and efficient iGaming focused operation. A proven operator, GNOG has delivered 45% CAGR in gross gaming revenues over the last 7 years. The yellow bars is the casino's gross gaming revenues, pretty straightforward, nice solid uptrend. The red line is their advertising as a percentage of their revenues. So you can see right at the beginning, they were spending as much money as they were making in revenues on advertising, and they've slowly decreased it to under 20%, which is huge. And at the same time, their EBITDA has been growing much faster too, up over 20, probably it looks like 30% too for their EBITDA. So you can see they're spending less money on advertising. Revenue is still seeing healthy increase in growth, and their EBITDA is increasing as well. So this is a good example of the snowball effect. They got the ball rolling. They started accumulating customers, and it just got easier and easier to build their customer base. This metric here is their average revenue per user. So we can see from 2014 to 2020, their average revenue per user increased 34% since inception, which doesn't make any sense because Inception came out in 2010. So from 2014, they've been able to find ways to keep their users more engaged, entertained, and playing more, which leads to more revenue for them at the end of the day. This is an interesting one. They're exclusive games. So 20 exclusive games have already been launched in 2020, and there are 80 more lined up for 2020 to 2021. This is a huge one, right? If this is anything like Netflix's original content, right, they're investing massive amounts, like 14, 15, I think it was like close to like $17 billion they were supposed to invest this year in their original content. Obviously, that's not happening, Ronapalooza. But their original content for Netflix is what sets them apart. Like their original content is their best content. Nobody else has it too. Not only that, like it's actually like the best content wise. It's not available anywhere, so you have to have Netflix. So if they can establish a brand, they can have these nice unique games that nobody else has. That is a huge, huge potential to just continue to retain customers and keep them coming back, which we're going to look at in just 1 second, so hang tight. Their customer service representatives average 3 years experience in the online gaming industry. They're available on the phone, live chat, email, and help center. There's 24/7 customer support for all methods, which is huge. You know, you're up 3 a.m. playing some blackjack, you know, you're gonna want some support. And a 96% customer satisfaction rating. There's the 96% customer satisfaction again, and the response time for chat is 0.7 minutes, and for phone call is 0.9 minutes, which is huge. Their inbound answer rate is 95%, and their handle times for chatting is 8.3 minutes, and calling is 4.6 minutes. So what the handle time means is just how long the interaction is from start to finish, including any time that they're on hold. So this is really nice to see. Chatting obviously takes longer because, you know, you have to type. Calling, 4.6 minutes, that's pretty good. So it shows that most of all the problems are solved pretty quick. They're available. They answer you, you know, you're not on hold, you're not waiting too long. Less than 5-minute average call is very, very nice. Now, if we look at the year-over-year financials, net revenue was 54% and 29% year-over-year for 2018 and 2019 respectively. Gross profits were very nice, coming in at $26.2 million and $34.8 million for 2018 and 2019 respectively. A 61% gross margin for 2018 and 63% for 2019. Net income of $7.2 million in 2018 and $11.7 million in 2019 for profit margins of 16.7% and 21% respectively. They're reducing costs, as we already saw earlier in that graph where they showed that they're lowering their marketing spending. And this is still a growth company. They're gonna have a lot of growing costs, growing expensive, especially with they entering these new markets, these new states. There's gonna be a lot of costs associated with that. But this is a nice jump from 2018 to 2019. Here they gave us their projected revenue. So expansion plans for Pennsylvania and Massachusetts, which are going to be huge growth markets for them, starting from zero, right? So they're not in there at all. They're going to be able to post some crazy growth numbers. This pie chart on the right shows that in 2025, they expect New Jersey, the only market they're in right now, to be less than 25% of their total net revenue, with new states being the majority. Last slide before we get into my thoughts is their highly loyal and valuable player base. 50% of gross gaming revenues in 2019 were generated by cohorts acquired before 2018. So cohorts just basically means like customers. This shows that they're able to retain a large amount of their customers. You can see 2013, 14, 15, 16. You see those are all strong numbers, especially that's a long time. That's several years. That's huge though. If they can get these customers and get them for life, they said that they make like 7.7K over 5 years. You know, you just keep 5 years, 5 years, 5 years, you just keep stacking it up, growing more and more customers. It's going to be a cash machine of a company. They're only growing bigger and faster as time goes on. If they can just have this high retention rate, they're going to just be able to just be stacking up with recurring revenues, which are just absolutely so huge. Time for my thoughts. It's already a profitable company. I like that. I wouldn't be surprised to see that profitability take a hit or slip down. As they continue to grow and to expand into these new states, there's going to be huge costs associated with that. And so that makes sense. Profitability isn't too much as a concern for me as a potential investor. I'm more focused on their revenue growth, their market shares, and how their EBITDA is looking. And those are all very strong, very healthy from what I've gathered from my research. All in all, my thoughts, this company valuation does look very nice compared to their peers. We're looking at a potentially similar Helion and Nikola Motor situation, so it's going to be very interesting to see how it plays out. These SPAC companies have literally just been popping up out of everywhere. It's great. This one I actually had a lot to talk about, which is nice, but will I be buying this stock? I don't know. I actually might buy this stock tomorrow. I'm not too sure yet. I'll let you guys know. But I do like it. I like the valuation, although the only thing that's sort of just holding me on the fence is the government regulations. So that's all I got for this video. I hope you enjoyed. If you haven't already, click that like button, subscribe if you're new. Hopefully I'll see you sometime soon.